p.m. Kaddish with the Kaddish Group at Keller Williams Realty.
And hi, I'm Suzanne Starkey.
So this is going to be a little bit longer video for our market updates. We always like to share what's going on in the market with you, but there is a lot going on. We're a little extra right now, if you will. So we're going to share first off some numbers, what we're seeing, what we saw in May in the Kansas City area, because of course that's always exciting and I love the numbers and all that of it. But then we're going to talk a little bit about maybe if you've watched the news or have not lived under a rock in the last week, what is an interest rate, what is inflation, what's going on, and
more importantly, how does it impact you?
Right. Do I go to bed crying or do I go to bed like smiling? What do I do? So,
spoiler alert, you don't go to bed crying. Hang with this. This
honestly,
is all good.
It has all been predicted. We have all been talking about this. It's really not doom and gloom. Turn off the news. I cannot stand the news. But yes, there are some things that I think it's important for you guys to know. So
our numbers are looking like what in May?
So interesting. Closed sales.
Yes.
So we'll start with that. Closed sales in our Kansas City, Heartland MLS, if you will. 2022, we had 4,161 homes close for the May 2022. In 21, we had 4,107 homes close. So we were up 1.3%.
That's good.
A little bit, yep. Now, average sales price.
This is the number everybody cares about.
Right? Do you think homes have went up or not? No? Okay, so average sales price. I'm going to give you 21's numbers first.
Okay.
In May of 21, we were at $312,712. Okay. In 22, we were at $342,837.
So we went up.
We went way up. We were at 9.6%.
That's a lot.
That is a huge number.
That's a lot in 1 year.
When average, we expect appreciation to run between 3 and 4%. We're 3 times that number.
That's awesome.
It's a lot. Well, it's awesome if you bought your house.
That's true.
So, but one number, and we've been talking about this quite a lot, is our pending sales.
Yes.
There is some stuff going on that we want to look at, and we really want to see where this goes. So, note, our closed sales were up.
Right.
But our pendings as of right now are actually down. Right now, or for May, we were at 4,288 in 22. We were at 4,569 pending sales this time last year.
So we're down.
We're down, we're down 6.2%.
Okay, so we're selling more, but we're closing.
Correct.
So how would you interpret those numbers for somebody that's hanging out with us?
The pending sales have actually been down all year long.
Right, we've been watching
with the exception of February.
Right.
February's numbers were up. So we know a lot of homes that went under contract in February, March, actually closed in May. So I'm really anticipating what is June going to look like. Are these closed sales going to be down a little bit in comparison to the previous year? I want to know kind of where we shake out on that. It's something I'm watching very closely. But this has been screaming at us, hey, we're going to have a little bit of a normalization in the market. So I definitely don't want to say like, oh, it's down or anything like that, because we're actually still up in comparison to like the pre-COVID numbers and things. We are definitely still up, but we are expecting our market to normalize. Again, something we've been talking about for a really long time. In fact, I have the numbers here. NAR came out with the numbers. Pre-pandemic home sales. In 2019, home sales were at 5.3 million. 2020, they were at 5.6. 21, they jumped up to 6.1 million. Huge jump, okay? In 22, they're expecting it to go back down to 5.6. So in no way are we down.
No, we're just normalizing.
Which was desperately needed.
It really was.
We cannot continue a 9% appreciation year over year over year.
No.
Which brings us to an affordability thing.
Exactly.
We've known, hey, we cannot sustain this. How are our kids going to afford houses? What's going on?
Right.
All of that. So let's talk a little bit about what we're hearing in the news. Okay?
Exactly.
My favorite thing, the news.
Okay, so we'll be news reporters here for a minute because we know
and we're going to actually share the truth and what's going on locally.
Exactly, because whenever you're watching the news, generally what you're hearing is what's already happened, already taken place, and it's also at a national level. It's not generally the news is not reporting local level numbers; they're reporting national. So let's talk about we just talked about local numbers, but now let's go on ahead and spin it in terms of what does this mean for a seller right now?
Okay, so yes, interest rates are up. They are higher than they were 6 months ago, no doubt about it. but it's not unanticipated. We have been talking about this. They've started creeping up earlier this year, and nobody was stressing out. But what happened and what happened so quickly was a combination of a few things, okay? So very long story short, and if you want to have a consult and talk more about this, I'd love to, call me. But essentially, whenever you get a loan, it's not uncommon for you to get that letter that says, hey, your loan's been sold, and now you're making your payments over here, okay? So what happens is these banks, they have so much money to lend, and they go lend it, and then they sell a bundle of these loans to mortgage-backed investors, okay?
Right.
Well, the government's been one of their best buyers. Hey, we love that government, they're just buying our stuff. Great. Well, the government had announced earlier this year they're going to stop buying in the summer, okay? So markets start creeping up a little bit. In combination, inflation numbers come out.
Right.
Inflation numbers were over 3% higher than where they had anticipated it being.
And that's impacting not just home. I mean, it's everywhere, right?
Yeah.
Groceries, gas, we all feel it.
Correct.
Exactly.
And for those of us that have teenage kids, we are really feeling it at the grocery store.
Yes, we are.
What's going on is, and these high inflation numbers come out, mortgage-backed securities, the government said, hey, we're not buying anymore.
Right.
It's summertime, June 1's here. And so the banks came in like, hey guys, who wants to buy our stuff? And people were like, cricket.
Nobody's doing it.
Yep, like, hello, we're here. So that threw everything in a tizzy. Finally, some investors were like, hey, we'll go ahead and buy it, but we're going to do it at a little higher rate. Okay, well, in order for all of this to level out, the Feds, in combination with this too, another combination, in March of 2020, right when the pandemic hit, Feds dropped the prime rate to 0. Well, what that means in the world is, of course, nobody got a mortgage for 0. If you did, well, I missed out somewhere. But essentially, the rates are always a little bit higher than what the prime rate is because banks put their risks on it and such, and so it's always a little bit higher than Fed rates, okay? So Feds say, hey, we're going to jump the numbers up. Well, the mortgagers piggyback on that, and you have this higher rate increase, okay?
Right.
The government increased that rate at much higher numbers than we've seen in the last decade or so, couple decades, and that made a big rate hike, okay? That sent everyone in a tizzy, okay? So all of this stuff that is happening, it has been anticipated. It took a little bit sharper, if you're looking at the chart, it took a little bit of a sharper curve than we anticipated.
Right.
But honestly, not drastically.
Right.
So that's the thing that I want to make sure that the public knows is, yes, things are changing and it seems like it's changing really fast. But for those of us in the industry, we've all known and we've been communicating with our clients, this is happening.
Definitely.
So yes, there's some ebbs and flows and some variations with how quickly, things are going to go up or down or what have you. But it's all been anticipated.
Sure.
So,
because it's still very much a seller's market.
It is still. So here's the thing, guys. We are anticipating rates are going to continue to go up a little bit. We're not expecting them to reach double digits. You're going to hear some doom and gloom and all of that stuff. Nobody that we coach with or anything is saying that they're expecting double-digit rates, okay? We are expecting them to continue to go up a little bit. We are not expecting them to see a sharp increase like they did again anytime soon, okay? The inventory is still low. That has not changed yet. So the inventory for homes are still low. Even though we're normalizing, it's still a great time to buy because we are continuing to expect appreciation. Not at the 9%. We are not expecting you to get that, but we are expecting our more normal 3 to 4% appreciation, okay?
Right.
So with the appreciation, it's not going to be cheaper.
No.
The interest rates aren't going to be lower. Purchase something now.
Yes.
If you are a seller, it is still a good time to sell because your inventory is still low, making your home desirable. Okay? Now, of course, and we say this every time, the biggest caveat is this is everything, this is what's happening in Kansas City, and everything in real estate is so local. So in some areas may have a little bit more impact than others.
Right.
There may be more homes available. In turn, you may not get as high of, multiple offers and all that. There are some areas that are still so desperate for anything.
That's true.
So give us a call. Let's talk about your specific situation.
That's the biggest
and we're going to
thing.
tell you what's going on.
Yeah, that's the biggest thing is just understanding what you guys need and then relating that to how we understand what's happening in the industry. Because like you said, we've known this is coming.
Yeah.
And so we've prepared and we know how to build strategies for you in order to be able to get you where you want to go.
And that's the
either
thing.
from selling
In
or buying.
March, in March, the news wasn't wanting to talk a lot about, oh, rates are starting to go up. It wasn't exciting yet. It goes up 0.75 of a point. Now it's exciting. Hello, this has been happening. And for those of you that have been buying, you've seen it. You've known,
Right.
people have already, we closed people last week at 5%.
Exactly.
So it's not a surprise.
Yeah,
So
it's doable.
Yeah,
so
absolutely.
Definitely good for sellers and actually buyers. There's a lot of benefit for you to still be getting out there and doing stuff. The biggest thing is if you're thinking about it, give us a call. Let us sit down with you and help you with it.
Yep.
And most importantly, be sure to check back with us next month when we get those June numbers.
I know.
And we can keep telling you the story on what's really happening.
Right. Well, thank you guys. And again, we apologize for the little bit longer video. We had a lot of information that we wanted to share. And honestly, we can keep going for a long time, but we're going to try not to do that. So thank you so much for joining us. If you've stuck with us this long, we appreciate it. Call us with any questions.
Absolutely. Thanks, guys. Bye.